Hey, in this video, we're going to discuss how to rehab a house with no money. In this show, we talk about entrepreneurship and investing for value. So, the question again today is how to rehab a house with no money. I think to fully answer this question, we have to understand what a hard money lender is. A hard money lender allows you to take out a loan against an asset. That asset is collateralized, meaning that if you do not pay back the loan, the banker or private company will take your property. Hard money loans have an interest rate anywhere from 6% to 14%. A lot of people use hard money lenders because it's less paperwork, less bureaucracy. They're easier to work with than a Chase, Bank of America, etc. Typically, a hard money lender will give you 65% loan to value. If the property costs $100,000 fully renovated, they won't lend no more than $65,000. The bank is trying to protect you while protecting their investment too. The price of the house and the price of the rehab can't be any more than $65,000. The price of the rehab is why we're here today, is what we're going to discuss today. That price of the rehab will be fully paid for by the bank, and I'll show you how. The second thing we got to realize to fully answer this question, how to rehab a house with no money, is this power of OPM. Let's say you buy a one-family house. This one-family house is $100,000. The house needs renovation work. Fine. You call up a hard money lender, bank. He says, how much is the house selling for right now? You say, oh, the seller wants $50,000. The bank says, okay, how much rehab does the house need? You say, oh, it needs $15,000. So now we got a house that costs $50,000, and we got the cost of the rehab, which costs $15,000. So now we're at that 65% LTV. The current market value of that house, when it's fully renovated, will cost $100,000. So now the bank is excited. That hard money lender is like, yes. He's like, I can make some money because it has a 65% LTV. And again, not only that, that banker is not only protecting himself or herself, that banker is actually helping to protect you as well. That leaves you with $35,000 in profit that you're going to take home and put that in your bank. Now, as you go through this process, after you close the deal, what you got to have money for the deposit of the $50,000. Typically, the hard money lender would charge you 25%. The deposit typically for a hard money lender is higher than other banks. So they'll charge you 25%, let's say, of $50,000. You're going to put down $12,500. Where are you going to get the $12,500 at? OPM. Secondly, you need money for construction. Again, the bank has already funded you or approved you of $15,000 for the rehab. Now here's the answer to the question. They funded it, they just didn't give it to you the day of the closing. So what you got to do is, you got to have at least $5,000 of your own money in a credit card, or again, other people's money sitting in your bank account. So when you start the rehab, you spend your $5,000. You fix the floors, you fix the windows, you fix the walls, you fix whatever you got to do worth $5,000. At this point in time, you would have already sent your scope of work to the hard money lender. The scope of work details every single thing that needs to be done for your house. construction wise. The hard money lender looks at this scope of work and he says, okay, you've done $5,000 worth of work. They send an inspector to come out to your house. The inspector says, okay, they look at the scope of work. They see that the work was done. It cost $5,000. The inspector signs off on it. And after that, 2 days later or within 24 hours, the hard money lender sends you $5,000. That is how you can rehab your house with no money. This is how to do it. This is the answer to your question. And then what you do is you take that $5,000 and you go back and you renovate the other parts of your house that hasn't been renovated yet. And you just keep doing it until that $15,000 is over with. All right? And this is pretty much how it happens. Now, that's the moral to the story. Don't really get no deeper than that. You take a house, you find a house that has a 65% LTV, okay? And you look for homes that are below that 65% LTV. So this house, for instance, was $50,000. You may want to try to find a house that's for $25,000 or $30,000. Now, I will forewarn you, this is only an example. Sometimes hard money lenders don't lend below $75,000. So you need to buy a house that's like $100,000 or more, or $150,000 or more, using the same strategy though. Using that 65% LTV. So there we go. Until the next time, this is how to rehab a house with no money. I'll see you soon.